I got a new complaint. Hey, good morning, everybody. Yeah, boy, it's a Friday, which means you've all almost made it to the end of the week. So, good to see you. Welcome to the Forex.Today YouTube channel. We're a community of 13,000 foreign exchange traders, and we gather at 8 a.m. New York time to realign our satellites. It's approximately London lunch, the beginning of the day here in America. So thank you for being an active member of the community. I hope that you learn things like patience and discipline, technical analysis, fundamental analysis, trader psychology, and all that. So make sure you subscribe, like, and comment, and of course, treat all your fellow traders with dignity and respect. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So nice to see you, everybody. Hope you're safe. I'd like to thank the sponsor of our community, that is Traders Way. Please visit tradersway.com. They are a boutique foreign exchange trading brokerage firm that would like to earn your business. But they sponsor this or our community to bring this into your life. They want you to be a more successful trader. They value education. They value you. They want you to succeed because ultimately a successful a client is a more profitable client for them, because you don't just trade your $500 account for a couple of weeks, blow it up, and disappear. Instead, you trade every day, every week, every month, every quarter, every year, year after year after year, because you're profitable. You stick around and you grow your account size. You grow your lot size. You grow your trading, so to speak. So that's the best customer in the world, and they want you to be the best customer you possibly can. And the only way to that is proper education, proper support, and a broker that actually executes your trade. So tradersway.com, give them an opportunity to earn your loyalty and respect. Trying to get, for some reason the platform doesn't fit perfectly today. I'm going to change that a little bigger. Yeah, I heard that, Jim. Thank you for the email. You know what? It looked perfectly fine yesterday, so I don't know what happened. In fact, I logged into YouTube today to check out that video, and all of a sudden it said it's still uploading. I'm like, what do you mean it's still uploading? It was done last night, and I mean, obviously I put it on a playlist and everything, so I don't know what happened. So anyways, I'll take a look at it. Okay, so this is very interesting. A new month. You notice big moves yesterday. I wonder if that had anything to do with profit taking. Also, I wonder why certain things flipped the way they did. Well, let's just start with sort of the basic facts here. Euro USD approaching the psychological level of 110. We're at the predicted weekly top, and it's starting to roll over. So that's cool. Okay. That's cool. Look where we are now. It's made a higher high, but we're in an exit zone. We're right below a psychological level. We're right below a pivot point, a key pivot point. So there's only kind of two things that could happen in a situation like this. Down to the 21, down to the 21, up to 110, and then what? Well, that's the big question. So if you're a bear, you're thinking, okay. And if you're a bull, well, I think even if you're a bull, you need to be worried. Oh, is that right, Jim? That's funny because I didn't even do it. So maybe, I don't know. I'll look into that. Morning, Maida. Okay. So anyways, that looks interesting, huh? We'll see what happens. We'll see what happens. But there's got to be something going on up there at this 110 level. Okay. And this is our projected top on Sunday. That's the interesting thing. This line in the sand was based on last week. So that's all there. Okay. So not illogical, right? So like if I highlight the monthly, this is, if you're a bear, what you expect to be the monthly high. Okay. If you're a bear, you think this 109.955 is the highest Euro USD will reach in the month of May. So that's how it all comes together. So there's got to be bears living up there, don't you think? Because this is the exit for bulls. This is the entry for bears. So something's got to happen. Even if the bears don't beat out the bulls, something's got to happen, right? You'd think. So very interesting. So the main point I'm trying to show is that there's a logical top there. But I saw an even more logical bottom, and check this one out. Isn't that just beautiful? That's in the textbook. Now, if you're bouncing off S2, that means this downtrend must have started not at the M3, right? That where you typically sell. No. It was so aggressive, it probably didn't even hit the M2. Instead, it probably started at the central pivot point. Is that what's in the training course? Is that what's in the book? Then you back up a little bit and right? Wowzer, look at that. It's sick. It's sick. That's exactly it, huh? Jeffrey, it's in the day trading course. I think it's day 2. Okay. So anyways, this is now interesting, isn't it? But like, this is amazingly textbook. If that's your top, then the projected bottom is this. Just crazy. Crazy. So now what do you want to do? Well, it really comes down to your bias. So this is the monthly sell zone, okay? And this is the weekly sell zone. I guess it's just another sell. Okay? So that's all. That's all. If you are a bear. Now, if you're bull, you probably want a dipsy-do. Okay, and typically if you're going to use things like price action, okay, that's probably going to be it. Okay, but bear in mind you're crashing into me. You're crashing into pretty big psych level here. Okay, so like as a bull, I would rather have a scenario where I blow above the psych level, come back to the psych level, and then buy it as support. What I don't like to do is go up to the psych level and see rejection. Right? So anyways, I might, if I was a bull, I'd probably wait for 139.50. Okay? And if I was a bear, game on, Bubba, game on. Okay. Very nice. Very nice. Textbook stuff. Textbook stuff. Aussie Yen, this was a big one in the live trading group over the last, 3 days? We had these long conversations about things like recognizing the trend. Okay, this trend here was very bullish. Every single day was a buy zone, every day the buy zone, buy zone. Okay, and I think it was way back on Wednesday, we were talking about the psych level of 70. Okay, and that bulls had all these opportunities. Okay, and that they should be expected to be challenged here. Now, the expectation of the challenge is the potential opportunity for the bulls, right? Or I mean for the bears. We talked about having the patience and discipline to make these trades as a bull, but also have the patience and discipline as a bear to wait and wait and wait and wait. And I said, that's the bigger part of patience and discipline. I say, you got to have patience. Yeah. Where's the next trade? You got to have discipline. Oh, I'm disciplined. Where's the right? Like, it's tough. It's difficult. It's challenging. It really taxes your patience. But you have to keep reminding yourself that your goal is to only trade what you believe is going to happen and wait for market conditions that are favorable to that. Okay? So imagine a bear having to not trade, not trade, not trade, not trade, not trade, not trade. And I think we were right in here. And I said, look, if you're a bear, you got to have your fingers on the trigger. Not that you're pulling the trigger, but you're ready. You're driving into smaller time frames. You're preparing. You're sharpening your saw or your sword, literally getting ready to go into battle. Okay? And so the two things were, bulls, you've been very patient, you've been very disciplined, you've probably been doing very well. Get ready and look at the most obvious place that you're going to get challenged. And don't be confident. Be ready to take your profit, because we know bears are going to be there. And then I said, bears, get ready, get your fingers on the trigger, because it's probably going to be your turn to dance. Okay? We had this as the obvious sell for May. That's on top of the psych level. That's on top of other things. This is the projected top for May if you happen to be a bear. So like all of a sudden, like there's 3 or 4 reasons why bears are going to show up, and bulls are worried. Like, should I buy the next dip? I'm like, well, you're always looking for the next dip. Okay? And you should be in tune to know that one more may be one too many. Okay? And we don't know. You have to understand that too. We don't know if it's going to blow through 70 and go all the way up to 73. It's plausible, right? But you have to expect the challenge here at 70 for all the reasons I just mentioned. And then what happened? Bears got their shot. Okay? And I believe it was Moshe that was riding this up. And I believe it was Maida waiting to take this down. Because Moshe was bullish, Maida was bearish. Moshe had a great couple of weeks up, or and then Maida was waiting. And there you go. Oh yeah, Jeffrey, that's part of performance coaching. So you might want to reach out to Ryan. Okay. So we talked quite a bit about oscillators last night. So it's too bad that recording's not in there. Do you guys remember? I think it was 69.20. I said if it breaches 69.20, this is coming down hard. Was that the right number? Something like that? Does anyone remember from the group last night? Was it? So we had it on the daily chart. And I had it here, I think. Yeah, there you go, 60. So I said, be ready, fingers on the trigger. This includes bulls too, because bulls should know it's the same knowledge. So if you're like, if it breaches 69.20, this thing's going to tank. Well, as a bull, you should probably get out with as much profit as possible, right? And bears should go, aha! This is now bearish. So a bear might have taken it here. They might have taken it here. You know, there's multiple ways of doing it, but they're not confident until this is breached. And by confident, I mean, guess what's going to happen on Monday, according to a bear? That's what a bear is going to do on Monday. Okay? But last night we were talking about what happens if this does what it ended up doing. What does it do? And we talked about how that would impact an oscillator based on the mathematics of a stochastic cycle. There's that fancy math Harvard stuff to impress the ladies. Ladies, if you like my stochastics, wait till you see my regression channel. Oy vey. Standard deviation all night long. That guy was funny yesterday. La 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 la. That guy was so funny. Your voodoo magic doesn't frighten me, man. Oh, the difference between Stokes and RSI is probably very little, but like the difference between MACD and stochastics is quite big. Yeah, so I would just pick one or the other. That's why. So one of the things I tried 20 years ago when I was trying to decide which oscillators would work for me, I had this indicator programmed in the deal book. It wasn't deal book 360. It wasn't even deal book FX2. It was just deal book. And I had it programmed a triple RSI indicator to try to line up RSI on 3 different time frames, but on one chart. And so it was kind of cool actually. So here's the wait. That's so bad I can't use it. Let's say at the bottom of my chart I had something like this, and it had, let's say, an RSI cycle. Okay, and that would be filled in fact, with a color. So, right. Hang on. Trying to be in. By the way, does Does your MT4 have nice drawing tools like this? Okay, so I'd have one RSI like that. And then I'd have another RSI that kind of would do something like this. Okay. And that would be filled in. Okay. And then I had a third RSI. And what I tried to do is look for periods where you would see the third RSI. So you'd see a little like this, and then you might see it like this, like, right? And you might see just a glimpse here. And somehow the little glimpse of the third RSI peaking above the other peaks and valleys somehow 60% of the time worked. And after a while, I just dropped it, stopped using RSI altogether because I found this Stokes made more sense. Okay? It just wasn't helpful enough most of the time. And then when it was helpful, I already had something else that told me something similar. So I just got rid of it. And I whittled it down to MACD and stochastics because I wanted to know very specific things. So if you go back to the standard methodology that I outline in my book, I want to know the market when it goes this way, but I also want to know when price does this, right? And then down, 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 down. And then price does this again, right? So I need direction of the market, and then I need price in the moment. And so MACD, right, ended up telling me market, and then stochastics ended up telling me price because of what the algorithm is actually doing. Ah, you want this Harvard cap? Let me tell you, there's only one way, bro. There's only one way. By the way, there's not very many. You go to this huge bookstore and they got millions of things you can buy. And they're like, I want something that says alumni on it. And they're like, we don't sell that. No. So that's cool. But I worked hard for that hat, so I like it too. So anyway, so I got into the math of like, what is the algorithm actually calculating, and how could I make that useful? It turned out MACD was appropriate, stochastics was appropriate, and I just dropped all my like RSI and the other things I was messing around with. Yeah, eBay that. Yeah, I mean, the Harvard thing is funny. You know, like, for example, I know a dude, I've tried to do some deals with him over the past, but whatever, and he started a new company, and he hired a president, and he's got some staff, and he's so happy and everything. And I'm like, well, okay, I guess I'm not part of that, right? And then his CEO that he hired, his president or whatever this title was for this new firm of theirs, he's got an MBA from Harvard. I'm like, oh, no shit. That's pretty impressive. From Harvard Business School? That's really impressive. So I looked him up because I'm an alumni. I'm a member of the Alumni Association. I have access to the Harvard alumni database. So I'm like, type the guy's name in. Sure enough, never even attended Harvard. Liar! Liar, scumbag. He's got it on his LinkedIn profile. He has an MBA from Harvard. I bet you if you asked him what the name of the library was, he wouldn't know. I'm like, oh, really? What house did you live in? Oh, yeah? Liars. So that's the problem, right? Everyone wants to go to Harvard, but no one wants to pay or do the work. So, funny, huh? All right, so, yeah. So, people had to wait a long time for that Aussie Yen, but now they're getting paid. Cool. So, here's another interesting one. This is our pig dog. Okay, if we go back in time, let me give one more click. Of course, it's too much. But anyways, let's go to here. Yeah, we'll just do this whole thing here. All right. This opened OOP. What's supposed to happen, OOP? Four-hour 21 up, and then what? The question is, what happens to the US dollar when the stock market rises or falls? Well, a falling stock market, is that an opportunity to take risk or get out of risk? The rest should be easy. Yes, it sets up a counter trend. Typically Monday or Tuesday. It looks like this happened Wednesday morning. Roughly the same thing. Cool. Now, the next week tops out on the central pivot. What is the target? What's the expected target? A lull, it's on the webinar login page. There's a playlist. Yeah, guys, based on this, the target is here. What's supposed to happen in that green zone? Same thing happened here. This is an exit for bulls. This is an exit for bears. Okay, neat, right? All right, so here we are. Central pivot point is the low. What's the projected target for the week? R2. Notice that it's not M4. It's R2. Cool. Now what? Well, if you are a bear, you're going to look at this and say, oh, this is going to be a top. And bulls will exit. Then bears want to do some pivot point analysis, and they're like, this is the top. Okay? Neat. So if I was a bear, I'd expect a tickle of 25. Maybe some up, and then some down. If I'm a bear, that makes sense to me. And if you're a bull, you're probably going to say, okay, that's enough. No more fun. Okay? But notice, just picking on the pig dog. Okay? Am I bullish on the stock market? Yeah. Today? Maybe not today. But yeah, I'm a buyer. I love buying. I love it. Love buying stuff. For example, the US government gave me $3,500 that I didn't even ask for. They just put it in my bank account. So I could buy $3,500 of, MGM grand if it drops back down to $10. But yeah, I'm always a buyer unless there is the exogenous shock. There's always an exogenous shock. Most of the time, uh, like put it this way, most people make money when the stock market goes up. Right, so I answered that. Stock market goes down, the dollar gets strong. Done. Yeah, Firkin, so you probably aren't in it. Okay, let us, weird ocean. Let's do the different one. I gotta find which profile I like. Hello, hello. I guess it's this one. So congratulations, we hit 9,000 on Bitcoin. Very nice. Okay. Still clearly bullish at the moment. Okay. So I couldn't short it like this now unless you're just throwing down a trade at 9K, which I think is a terrible gamble. Technically, everything on this chart is still bullish. But yes, you are in a bear sell zone. But yeah. Yeah, Barry took profit up there, and that's really what we were supposed to do. Okay. So before you can sell this, you either need it to kind of top out this way, or sort of breach the 5, right? Because you breach the 5 and you go down to the future 21, which would probably be there. So that would be a drop from 9K to 8K. But that hasn't happened yet, right? So that's a bit of a stretch to be short. And exiting was the logical target. That was the logical target. Now, it can go higher than the logical target, but I never let it go lower than the logical support. How did I get a check? It just, I didn't even get a check. They just deposited it. So I don't know why. I didn't ask for it. I think the government just put it in everyone's account. Yeah, it's weird. I don't know why they gave me the money. My wife had to look it up. She's like, "What the hell is this?" She looked it up and she's like, "Oh, free money from the government." Okay. I mean, we don't need it. It makes no difference. Makes absolutely no difference. So, threw it in the retirement account. It might have gone into our vacation account though. But we don't take very many vacations, and I don't know when we're gonna. We put that in the cruise account. It's funny because we don't go on cruises. The only cruise I've ever been on was a Disney cruise. But my friends, they spend like more than $100,000 a year on cruises, and they're not sure when they're going to get an opportunity to go on another cruise. And it's funny because they probably have prepaid for their $30,000 or $40,000 worth of cruises that were supposed to come up. Because like literally every 6 weeks they're on a cruise, and all of a sudden they have all this credit now. Like, what are you gonna do when you got like $40,000 worth of credit on Princess Cruises? And you're like, are they ever even gonna cruise again? right? Yeah, Jake, I agree. I agree. I think also it's interesting that other countries couldn't possibly do something like that. But whatever. All right, so let's take a look. Was that right, share trade? That's the funny thing with America. The states were given all the power. So it's interesting. There's something in Missouri that is a big no-no. That's funny. Ryan says, in my opinion, are psychological prices more technical or more fundamental? Well, they wouldn't possibly be fundamental. Okay. Your import export data or your balance of trade data doesn't look at price on a market. So it could only be technical. Okay. So, anyways, really hitting some top here. Okay. This was our buy zone earlier in the week. On Sunday, we had it coming down to the M2 area, a little bit lower, actually, is what we said. It actually ended up doing it, which is kind of interesting. It hasn't hit the top, but I don't think anyone believed it would go to 25. But now here we are, sort of in the neutral zone. What are your thoughts, guys? Are you going to start May by taking this down to 12? And then buying it and go from 12 to 20? What's your thought on that? How about this? What do you think of that idea? Oh, we make plenty of donations to charity, Maida. Also, as a family, we do things like work at food banks. So I do plenty of that. My comment was more of like the government program. Okay. Right. Also, I pay a lot of taxes. So I certainly make my contributions. So anyone going to do this? What's your any thought on that? Yeah, that's the problem with that, though, right, Maida? So just like last time in 2008 when the world was crashing, the government came out, gave banks billions and billions and billions and billions of dollars each. Even if the bank didn't want it, they forced the bank to take it. And then the government got really mad because like the CEO of Bank of America spent it on a new jet and he spent a few $1 million redecorating his office. And they're like, "What the hell, man?" Like, look, we didn't want the money. You forced us to take it, but you didn't even tell us what to do with the money. So the U.S. government in that time of crisis spent, let's say, $1 trillion, gave it to businesses, but didn't even tell them what to do with it, had no requirements or restrictions, didn't even have a method of measuring or providing oversight. They just gave it, which is like the dumbest thing you could possibly do, right? Um, there should be a sort of a better way, so to speak. All right? That's all. There's no seasonality bias for May. Well, Javier, I know what you're saying, but I'm funny. Like, I don't mind paying taxes, and so I don't do anything to try to get my taxes lower. Like my home office, for example, I don't write that off. I just don't write that off. My internet connection, I don't write that off. I don't look for write-offs, so I generally just pay the taxes, and uh, I'm happy to be in this country. That's that. All right, so let's move on. Let's do some gold. So we have gold heading down, as you can see. There's our sell zone, which we did. I guess we would have done this on Sunday. Down, 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 down. Okay, so what? Let's put this together. Okay, this is where a bear would sell. This is where a bull would buy. This is where amateurs screw up because they're doing stuff in there. All right. So we got the possible move, right? Okay. Bears sold where they were supposed to sell. Bulls bought where they were supposed to buy. Okay. And then you'll notice that this is part of the sell zone. And bears followed up, right? So there's an attack, counterattack, and the bears push forward. Okay, 618 predicts. Let me ask it as a question. What extension does the 618 predict? I'll give you a hint. It's in my book. That predicts this pivot. Isn't that great? Well, guys, one interesting thing about living in the United States is my taxes are low relative to like Canada where I was born. So taxes for me are already low. In exchange for paying taxes, I have bumpy roads. I have a horrible medical system. The schools are a mess. Okay? So there you go. But my taxes are low. But we have a kick-ass army. Okay? And then so that's personal taxes. Okay? Now, my business taxes, right? And then specifically Forex taxes, when you are incorporated properly and have trader tax status, they're extremely low. Extremely low. So I'm sure I could get my taxes even lower by writing everything I possibly can write off and then maybe fudge a few things. I don't do that. I don't do that. I don't even write off my computers kind of stuff. Like, I just don't care. I just pay what I owe, and that's that. But I don't have like an aggressive tax attorney or anything like that. So I just have them fill out all the formulas, hit the button, it gives me a number, and that's the number. And I don't try to get clever. It's just easier to make money than try to, save it on taxes and then get an IRS audit and get screwed over and you end up losing money. So, yeah, whatever. I just don't want I'd just rather not have the audit, I guess. Whatever. Okay. All right. Risk off. Okay, risk off. Now keep in mind, just a few days ago, bears were extremely upset. When am I ever going to get a chance to trade? I've gone weeks. Right? And then, so anyways, it's really awesome how we've had these conversations. Like, don't worry about it. Relax. You'll get your chance. In a risk-off world, what do we assume is going to happen to the Aussie dollar? So it's just a commodity. That's all. It's just a commodity currency. That's how I look at it. Okay? So when there's risk on, Aussie is strong. La 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 la. So we had 3 weeks of risk on. Great. And then it stopped. La 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 la. And it stopped on the Fed meeting. Can you see that? Fed meeting. This one looks more to do with ECB. But Aussie week versus pound, Aussie week versus Swiss franc, Aussie week versus Kiwi, Aussie week versus US dollar. All of this says one thing. Risk off. Also, to add to this, what else appreciates during risk off? We have Aussie depreciating in risk off, but what appreciates in risk off? You learn quickly, young Padawan. Is it Padawan? Young Padawan. Wait, no. Sasson says exotics. No, like you couldn't be any wronger than that. Thank you, Maida. Great, now I have to pay taxes, Maida. Yeah. Yep. Well, that'll give me a real nice cigar, right? So, yeah, so dollar gets strong, yen gets strong, Swissy gets strong. Okay? And I want to point out that it happened at 8 a.m. on the 30th. Is that 30th? Is that really 30th? The 30th? That was yesterday. $8 a.m. No, euro goes up when the Central Bank of Europe says they're willing to bail them out. They're willing to do more. That's all. Think of it similar, but not as strong as Draghi's famous I'll do whatever it takes. Okay. Why did it drop happen? This is the ECB. Guys, central banks create these changes and trends. Central banking. So anyways. There's also another aspect of profit taking. So think of yourself as a wealth manager now. You manage, let's say the average portfolio at most of these wealth management firms is about 300 million. Okay? So let's say you manage 300 million. How did March go for you? Raj, I just explained it. It's the ECB. So stick with me, guys. How was your March? Did you have clients calling you? Did you have to call your clients? Did you have to explain to them diversification and you can't time the market and you have to have the long-term game? How was your March, guys? March would have been bad. For sure. So, for those that maybe bought at or near the bottom, April was the best April. Or sorry, the April was the best month in like 30 years, guys. If you'd simply bought at the end of March, your April was ridiculous. So in some cases, you're up 50 or 60%. So some people took profit on the last day of the month, right at the market open, and then what? Called all their clients to say, hey man, I just made a boatload of money for you. Okay? Cool, right? Profit taking, guys. Now, you're going to have to ask yourself, will they buy again? They've just taken profit. Will they buy again? What's your opinion, guys? What's the cliche for the stock market for the month of May? Does anyone know the cliche for the stock market in the month of May? Oh, really? That's funny because I had it backwards. No way. Is it really selling May and go away? Oh, well, that's the dumbest thing ever. How funny is that? I thought it was buying May and go away. Oh, look at me. I don't know anything. I thought it was buying May and go away. I don't know. Okay. So, all right, then forget the cliche. Or maybe that's the cliche. I don't know. That's pretty funny. I honestly thought it was buy May and go away. I don't know. See, I don't trade that way. Yeah, I guess that's what I do, right? So anyways, that's funny. That's pretty funny. Yeah, I prefer to. Yeah, I prefer to buy. How funny is that? But I typically buy in the summer. Yeah, but probably not this year, right? Well, how about this? You guys want to? Do you want to? You want to know how to make like free money? You'll need a futures account though, so you have to open up a futures account at a brokerage firm. But do you think volatility will be high in the third week of July or low in the third week of July? When all of America is in vacation and Europeans are getting ready to go to vacation, right? So Americans vacation in July, Europeans vacation in August. So right in the middle of those two things, volatility should be low. Well, Mr. Highfield says there won't be vacation in Europe. Well, then they'll strike. It's kind of the same thing. Okay, cool. So in September, 6 weeks later, and the campaign is in full swing. The American presidential campaign is in full swing. Biden's going to win. Trump's going to win. Biden's going to win. Trump's going to win. Biden's going to win. Trump's going to win. What do you think should happen to volatility? Huh. Well, maybe you have a VIX play. Now, this year's different than typical years, so I don't know if it'll be as much as typical. But typically by September, volatility is returned to the market, and by October, it's pretty good. But July, it's very, very low. So I don't know. Like, I don't think there's going to be a big move as early as there typically is. So I'm kind of already adjusting my typical strategy and stuff like that. But if you just think about it, right? Maybe if you were a genius like Ray Dalio, you can make a trade like when the market's thin and everyone's on vacation, trading volume will be low. And then when everyone comes back from vacation and they want to make their year-end bonus by trading like crazy, then volume and volatility will go back up. Huh. Well, you have to be a genius like Ray Dalio to understand volatility be low when no one is trading and volatility be higher when everybody's trading. Huh. Okay. No one's going on vacation this year? I could use one. Yeah, I typically don't vacay though. I don't do well on vacations. Okay. Whoa, dude. Question here. Help me. I'm a bit confused. So the dollar is a safe haven? Oh my God. It's the biggest safe haven on the planet. Are you kidding me? It's the reserve currency for the entire world. Yes, it's a safe haven. It also represents the largest economy in the world. with the most mature bond market in the world, with a very established banking system, with a stable political government, with the largest army in the world, with the most number of bombs. The economy is 70% feeding on itself. That means it doesn't need China. It doesn't need Europe. If they all shut down, America would do all right. We'd have to adjust, but it would do all right. The reason for it is the woman at Applebee's gets her hair cut at Supercuts, and the hairdresser at Supercuts eats at Applebee's. So the legal system, even if you're a foreigner and you do a deal with an American or an American company and they screw you over, you could sue them and you will actually win if you have legal course for that. Try suing a Chinese company in China. That's why they're not a reserve currency. Okay? So, is the US dollar a safe haven? It is the safe haven. When Indonesia and Malaysia are collapsing, every billionaire in those countries stuffed their money in America, not Malaysian banks, not Indonesian banks. They stuff them, all their billions of dollars, they stuff them in American banks, in the American legal system, in the American economy. Why? Because it's the biggest economy in the world, because it's the biggest bond market in the world, it's the safest legal system in the world, with the biggest army to protect it, with a tax base that actually pays taxes. Yeah. Yep. Yep. The US dollar is a safe haven. Faux show. That's why when the world is collapsing and we're facing zombie apocalypse, the dollar is unbelievably ripper strong. Right? Yeah. Hey, if you're watching this, could you take a second, please, and click the like button? I'd appreciate it if you told YouTube this was quality content. We did that. Bitcoin 9,000. We kind of already did that. Maybe I'll circle back in a little bit. Yeah, but the biggest part of the US dollar is it's simply the reserve currency. So, yes, it is definitely a safe haven. All right. This one doesn't tell me much. Okay. This one doesn't tell me much at all. So I would say there's a top there, there's a bottom here, and we're nowhere near either. So it looks like yet another inside month. It doesn't tell me risk on, it doesn't tell me risk off. Very, very neutral. Okay, for the month of May. If you go into a different time frame, like a daily, this is definitely bearish. So if I gave you this chart and I asked you to draw a stochastic oscillator, can you do it? Okay, this is what we were talking about in the group last night. Not on this particular pair, but okay. So in this case, it is crossed down and bulls should be out. Okay. Oscillator here was coming down, 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 down. Okay. So this is down, right? Because it made a lower high, lower low. So it's down. Then the next day did not make a lower low. Okay. And kind of almost made a lower high, right? So it certainly did this. Then the next day, it made definitely a higher low and definitely a higher high. So we're well back into the trade zone, okay? Inside, so it should pull up. Inside should pull up. Inside should pull up. Upside, upside, down. Okay, I just drew the oscillator for you. You're welcome. Okay. How low will I Ow, wrong one. Separate the suns. I don't believe it's fate. Okay, see it coming down? Net, 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 net. Okay, and if we close this candle right now, it would be crossed down. How low, how low, how low. Okay. Look at this, even CAD Swissy. Oh, snap! Take it on the other side. Take it on the other side. Take it on. Ooh, take it on. Ooh, ooh. Yeah, Mr. Morris, that's why I do it in my mind. So if you're talking about the other one, how it hasn't crossed yet, unless you close the candle, okay? But see, I do it this way. I say something like, what the algorithm is looking for is the lower low, okay? That's the first part. And then also the lower high. So if we're below here today, this is what I would have said yesterday. If we drop below this number here, which is approximately whatever that, 7650. If it's below 7650, then in the future, at the end of the day, the oscillator will cross down and be technically bearish. So I just do the math. So I'm like, oh, that's going to cross it over. And I'm done. Plus, I made the assumption yesterday. Okay? So it lags, except the human mind can think forward. Even though thinking into the future is an abstract, we can look forward in our mind, right? And like I say in my book, our mind's eye. You plan it first with your mind's eye, and then when you're looking at the chart, you will recognize what you've already seen with your mind. You saw it with your mind, but not your eyeballs. But your eyeballs are only taking in light, translating that into electrical chemical energy, and sending it to your brain, and then translating that into a vision. But you can also just have the thought, which is also electrical chemical energy. So there's really no difference between the light you bring in through your eyeballs and translate to electrical chemical energy, or just electrical chemical energy. It's the same thing to your brain. So if you look at this and say, all right, if we drop below this 7650, that's going to cross over the oscillator in the future. So I'll just do it now. Okay? So understanding the math is critically important for you to predict the future. How many people would agree with that? Understanding what the indicators you're using actually are doing. How many people here believe that matters? If you're going to use a tool, you better damn well know what it's telling you. Okay, so that's all. So we know price hasn't made a higher high, and we know candle is actually setting up a lower low, so that would do this. Okay. Now, if you sit here for 20 years, what you decide to do is you're like, you say, you say to yourself, I don't need this. I'll just do it, right? You don't waste the real estate because you can just see, oh, look, it's going to cross over, done. Okay. But do you need all of that? Like, do you need the Bollinger Bands? No. Most people use them wrong anyways. Okay. We have a MACD below the waterline but rising. Can you guys see that? So what is the MACD going to do tomorrow if this closes with a lower low? MACD is going to cross down. So MACD, so the way MACD works is you have an oscillator. Okay, there's a high, there's a low, and this is the histogram, right? Okay. Right now, MACD had, well, way back here. Okay, so where are we now? So starting around here, MACD is falling, and then kind of, it's flat, it's flat, it's flat, it's flat. And then tomorrow it's going to go, Okay. So this is the zero line. Okay. How low will I fly? Oh, I might have deleted them all, huh? Okay, we'll use this one. Okay, so what I was saying here is MACD is below the histogram. Okay, I'm right. MACD is rising. And if this closes bearish, then it's going to do this, which would be bearish. Okay. Is that right? We're getting bots subscribing? Or is that, so what did you do? You checked out their profile or something? It's interesting. All right, so any questions about that? So yesterday I covered the mathematics of regression channels. Today I've covered the mathematics of stochastics and MACD. So MACD is looking at the difference between two moving averages, whether they're converging or diverging. So I can see if this drops down, that's going to pull the 21 down, and nothing's really going to happen to the 55. So therefore the MACD will cross because the 21 will be diverging from the 55. The oscillator rolls over because of it's looking over the last few candles, and the math is saying, all right, it's stopped making higher highs, it's stopped making higher lows. In fact, we printed a lower high and a lower low, so that by comparison to these other candles will bring this down. Okay? And maybe you call it a morning star or something. I don't know what you call it. But, all right, so there's the math, I think, is important if you want to understand why it's doing what it's doing. Okay? What do you think? So we did them, like, again, yesterday, if you're interested in the, well, actually, you know what we did yesterday as well is I think we did the math on pivot points, right? Was that yesterday when we did the weighted average of a mean? One standard deviation above and below the mean, and then calculating the midpoint between the means to create all the pivots. Then we did the regression channel where we did rise over run to create the slope, y equals mx plus b, b being the intercept, m being the slope. Then we, from that, created standard deviation from the mean and created regression channels. Now we're doing the math on oscillators, in particular MACD and stochastics. I mean, that's a lot of math for 2 days. So you might want to check out yesterday if you missed that, but find that interesting if you want to learn statistics. Okay, so let's go to all yen pairs and see how they're behaving. Okay, so that's our plan from yesterday. All right, check it out. See, a bull is still looking to be a bull. Do you think a bull's going to buy 76? What do you think, guys? Is a bull going to buy 76? Well, Daniel, I don't even like the math on Fibonacci. I think that's dumb, actually. I think if you lived and you use 25, 50, 75, you do just as well. Or if you use 33, 50, 66, I think you do just as well. Okay. Okay. I think change your Fibonacci so it does 33, 55, 66. Okay. And I'll bet you anything, it'll work out just the same for you. And that this whole hocus pocus about the golden ratio and the golden sequence, like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 366. Anyways, that kind of stuff. And that there's a 618 relationship between them. It's all silly. Okay. And I think it was Fibonacci that actually was studying music. And he realized if you took a string on a guitar and you cut the string in half, it changed 1 octave, right? And then if you change them in different ratios, right, you'd get different changes in notes. And so somewhere in there, he probably realized there's a 618 relationship between a lot of these things and why guitars make certain sounds and stuff. So that's all he was doing. But I think the way the human mind will work is if you get a 1/3 discount or 2/3 discount, you're going to buy. So I think that is enough. It doesn't have to be 38.2. That point, I think, is dumb. 61.8. I think that's hocus pocus for the masses that makes people like, I don't know why it works, but it's magic, so I trust it. I think it's smoke and mirrors. I think if you just said, well, if it comes down 33%, I'll buy it. Right? Oh, it's come down 2/3. Okay, I'll buy it. Right? I think the other stuff is nonsense. And then, of course, when the Fibonacci guys come out, they're like, look at the branches on the trees. And look at the skin on a pineapple. Right? Look at how the starfish, the sea star grows in the sea. And like, oh my God. Are you joking me? What? You're crazy. Like, no, it's how the sea star grows, so I'm going to invest my money the way the sea... Oh my God, you're nuts. You're nuts if you believe that. Crazy. But if you're going to buy it and you got a dip, buy it, dude. That's all it is, right? How big's your dip going to be? 33%? 66%? Who cares? Buy the dip. Right? So anyways, let's get back to this. If a bull was going to buy, they're going to buy now, bro. That's what I'm saying. Okay? Okay? If a bull was going to buy, that's where they want to buy it. So 76 is the monthly entry. Oops. Let's change this up a little bit. And now look at the weekly. So I'll keep everything the same here. Okay? Oh, in fact, you know what? I can mark that. So let's just mark that. Let's mark this as the ultimate buy. So it's actually 75.86 or something. Okay. Now, let us take a look at this from a different point of view. Change the time frame. The strategy isn't different, just the time frame. Let's take a look here. Okay? Cool. So it says the buy zone on a weekly basis is around here. Now, if it goes a little lower, it'll pull this down a little bit, but not much. Okay, great. So now let's change the point of view one more time. And, oh, wait, I don't want to change the template. I want to change the indicator. Let us do this one more time and change it bullish, but for Monday. Okay? And therefore, we're going to put this. Cool. So I have 3 reasons if I was a bull, why I'd want to buy it. Okay? Another way of saying it is if you're a bear and you wanted to sell this, this would be the dumbest place you could possibly sell it. Because if there are bears, we don't know if there is, but if there are, bulls. We don't know if there are bulls, but if there are bulls in the market, that is the area they're going to buy. Okay? Somewhere in these 3 numbers. So you can simplify it and say, if there are bulls, there are, right? But that's why I looked at it and I said it and it took me 1 second. But if you take the time and go through it, you'll see, okay, there are bulls there. Now, the question is it truly bullish, or are bears going to get involved? Well, let's analyze their trade plan. So first of all, let's do monthly again. And remember, now we want to look at it as bears. So let's go find some bears. Okay? The closest sell for bears is here. 76.64. Okay? Now, let's take a look and see where bears would sell for the week. Where's the weekly entry for bears? They're going to want to sell here as their first opportunity and here as their second opportunity. Cool. Now, let's go in and find out where bears would want to sell on Monday. You guys following me? Bears are going to want to sell there and there. So we have really two sell zones for bears. Based on weekly and monthly, they're going to sell around 76.50. Okay? So, okay, down and up is likely to happen in the next 24 hours of trading. Okay? And if there are more bulls than bears, it'll continue up. Probably come down a little bit and then up. But if there's not enough bulls, bears will just take it down. So that comes up to your bias. No, Adrian. Why don't you tell support? I would love for them to carry indices, stock indices. Contact support and demand it. Okay? Cool, right? So, that's how I see it. Monday up, Tuesday down. But do you understand the methodology I went through? Right? As a bear, I need bulls to take this up so I can take it down. I need bulls to push CAD yen up 50 pips so I can sell it 200. Okay? So as a bull, I know where the bears are. And as a bear, I know where the bulls are. Okay? Well, would you please take an opportunity to click the thumbs up button, the little likey button? Would you please do that? Also, if you were new to the Forex.Today YouTube channel, if you subscribe, then on Monday morning when I start my webinar, you will get the invitation sent to you. You will get the alert. When I start my webinar on Tuesday, as a subscriber, you will get the alert. And on Wednesday and on Thursday. And then on Friday, I'm at FX Street for Trade Non-Farm Payrolls Live, which I've been doing for over 14 years, that one webinar. So I've been around. I know a few things. So it'd be great if you joined the community and collaborated. Okay. Can you do Aussie Yen? I already did that one in great detail at the beginning of the webinar. So I think it would be a disservice. But let's, yeah, I mean, I've done it so much. Sell it at 70, dude. That's what we talked about yesterday. All right. And in fact, we talked about that on Wednesday. Oh, the peso. We got to do peso. Got to do peso. Okay. First of all, let's find this. Let me get you a free bonus. Who wants a free bonus? Hang on, it's a little slow while I'm streaming. Oh, no, Morris. Let's do this. Let me get you a free bonus. Here comes a freebie. Here comes the drums. Hang on. It's slow while I'm streaming, obviously. Wait for it. Here you go.
Motley Fool issues one stock for the self-driving revolution report. Sign up now and get free access. Hi, I'm Rex Moore with the Motley Fool in
Just kind of in that area, sort of last week, first week kind of time period, for at least a few days, but sometimes the whole month, but it depends on the fundamental trend behind it. But at least, even if the fundamental trend was weak going into that period, at least for a couple of days, there would be a bounce. The Mexican peso would get strong for a few days, and then it would do so within a period of maybe 72 hours. Cool, right? It dropped. What happens to the price? It'll do whatever it was doing before, right? So anyways, how to trade the Mexican peso and why it works in 12 minutes. Enjoy it. Compliments of the firm. If you want a free Forex training course that's, what, an hour and a half long, that's on my other YouTube channel, FX Bootcamp. Cool. Yeah, is that my son? That's funny. All right, so what I expected was by today the Mexican peso to be strong and the dollar to be weak. Unfortunately, it happened too early. It happened on Sunday. And, wait, that's not even the right pair. No wonder that looked weird. I was doing other things, and it moved earlier than I would have expected this month. I guess you can't be perfect every month. Okay. And so the remittance trade, what I wanted, oops, I didn't want that. Let's zoom in, though, now that I've done that. What I wanted versus what I got. How about that? What I wanted was M3 to M1. Hey, that's what happened. But the problem is I wanted that to happen this week and not last week. So, poopy diapers. So anyways, typically, if the dollar is weak anyways, peso will come down today. We had the perfect storm. We had the first landing on a Friday. But with COVID-19, I think the Mexican remittance number is going to be a lot less. So typically I would expect $2.63 billion to be converted into Mexican peso today, or near around today. But I think this could be a lot less. In fact, it could be like 1.63. So we'd have to check those numbers. So it's less than normal, I would expect. But here's the thing. This is the perfect trade, though, right? This is a weekly M3. This is a weekly M1. That's straight out of the textbook. That's exactly what you want. But the remittance trade to me is not a technical trade. It's more of a fundamental trade. It has to do, not even fundamental, it has nothing to do with macroeconomics per se. It has to do with flow, right? So it's a flow trade. Cash flowing from the United States to Mexico, which pushes this down. Okay? So we'll see. I have a feeling it's going to be thin. I think dollar's strong at the moment, and so is this going to come down? I don't think, even if it was 2.63 billion, it's not enough to beat the dollar. I mean, the dollar is doing trillions of dollars a day, so like 2.63 billion is nothing. If it's 1.63 billion, forget about it, right? But typically when things are good in the United States, the dollar is weak, there's lots of jobs, people are spending money, and even Mexican citizens, U.S. citizens of Mexican descent, and Mexican migrant workers will have a lot of jobs, make a lot of money, and many of them will send money home. Okay? And the dollar's already weak anyways because the economy is good. The dollar's already weak because people are spending. And therefore, jobs are high. And then that income gets translated to sending money home to mom and dad, to the wife and kids, and grandma and grandpa. Baba and Guido. But I didn't really expect much this time around. But son of a gun, that's the perfect trade. Everything about it was perfect except I wasn't in it. That's its biggest flaw. Kind of funny, huh? So what else could we do here? We can take a look at, let's take a look at the indice and see if we can do some relative strength. Okay, Aussie is being crushed, but we sold that hard already. Pound being crushed, Kiwi being crushed, Euro up. So it's funny, like a couple of days ago, the opposite was true. Aussie was up, Kiwi was up, CAD was up. And we said this is a sign of risk off. Risk on. Okay? And at that same time, Swissy was low, dollar was low, and yen was low. Which tells us that's also risk on. They're being funded by those currencies. Now here we are, Aussie off, Kiwi off, CAD off. So all three commodity currencies have been hit hard. It's risk off. So you should be selling those. Euro is being impacted by the ECB meeting yesterday. So this is Christine Lagarde's impact. Okay, so that's sort of a one-off. And Swissy is strong like you would expect during risk off. Yen is only so-so, and dollar is still weak. So we got some weak dollar, and that's going to be Fed data. Euro is strong. That is ECB data. See, they're not the same. They're not the same. The Fed supporting the dollar weakens the dollar. The ECB supporting the euro strengthens the euro. So they're different. The ECB does not manage a reserve currency. Okay? So we got some mixed bits here. And if you don't like it, don't trade it. Okay? Just wait. So what you would normally see in this situation that I'm looking at is that yen would be strong, for example. And dollar would probably be strong as money is flowing out of Australia to the US, out of New Zealand to the US, out of Canada to the US, out of the pound, right? Out of Great Britain to the US. But more importantly, if that's happening, money from emerging markets would be flowing back to the US, for example, okay? But that's not quite happening because of the Fed. So this is a little bit strange. So you're probably going to see some things that are working just the way you thought, and other things are only working moderately. And this is why. So don't force it. So what I would do is if you are looking at a pair and it's not quite doing what you wanted to do, it'll either completely reverse on Monday and you'll say, okay, I was wrong, and you walk away. Luckily you didn't trade. Or things will improve on Monday. So for example, for those short Aussie Yen will drop through the next level. What you'll probably need is an you've already got the down, 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 down on Aussie Yen, for example. So now you need an up, up, and then a down, 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 down again on Monday. Okay? You see what I mean? So if you don't like market conditions, if they're not favorable to your trade, then don't trade. Wait for market conditions to improve, which could be later today, maybe after London close, or more likely Sunday, right? Or Monday when the market opens. Market conditions will likely be more favorable to you, which means you could trade and get better results, or they're worse than they are now, and you definitely back away. But that's what you want, to take your bias and then know what you want and then look at the market conditions and say, is this what I want? And you look at it and go, yeah, hell yeah. Then great, set up a trade and knock it down. And if it looks mediocre, it is mediocre. And don't trade in mediocre conditions, right? So let's take a look at Pissy. That's right, Jake. Well, you have to understand, like, I look at trading year over year, not hour over hour. So if all you did as a bear was sell in bearish market conditions, you will have to go days and even weeks with no trades. And then in some scenarios, you'll have a lot of trading. But at the end of the year, you'll be very profitable. You'll be very consistent. And you'll also have low volatility because you're only trading when you make money. And then you stop trading when you're not making money, and therefore your volatility is low. You don't have like plus 10, negative 22 months, right? So anyways, so looking at pound Swissy, otherwise known as Pissy. Okay. Do you want to sell down here? No. Is it bearish? Yeah. So let's review this. Okay. We got a top, oh, faux show. Then you're going to go lower low. Okay. And then I would use real body as well. So should you sell down here? No. Okay. That's the problem with using lagging indicators. Like by the time it tells you it's bearish, it's way too late. That's why you have to think ahead. You have to anticipate this before the indices roll over. Now, check this out. So what do you do between now and Monday? Up, 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 down, down. Nice! What do you think? Would anybody do that on Monday? Anyone going to take a shot like that on Monday? Catch a roll reversal off the 121? Make sure, though, you sell at 1.210000003. Okay. Let me ask again, would you guys please click the thumbs up button? Less than half the people watching right this second have clicked like. Less than half. So for those that didn't do the thumbs up, come on, just out of courtesy, common courtesy, would you click the thumbs up button? Shoot, if you think this is horrible, click the thumbs down button. But do something. Come on. Kick down, come clean, don't be a holdout machine. Cool. Okay. Pound Kiwi, probably not a good one. Pound Swissy, pound dollar. Beast. I think we actually talked about this the other day, didn't we? We already have this trade plan somewhere. Let's try that on Beast. Where would that be? I guess probably on the yen pivots. All right, 7 more people click like. Huh. Whale oil bee. So there's the CAD. Yeah, this was it. Like, for example, this is still technically bullish. We probably have to get below 132.5. This is still bullish for another 100 pips down for today. This could fall 80 pips more and still be technically bullish. How interesting is that? Okay. Yeah, I just did like 4 minutes ago. AJ McFarland. The only difference is I explain how you can do it yourself. Okay, so anyways, one of the things we've talked about was this being a potential buy for bulls. Check that out, how well it's happened today. So if you're still a bull, right, this is very interesting to the upside. Okay. So you have the right price, but you need more than price. So how do you reverse? If you're at support, how do you reverse the market? Well, a reversal pattern would be a good start, don't you think? Okay. And then I like the double bottom, higher high, higher low, 1, 2, 3 kind of thing. Right? I love kind of buying in here. Okay. So you have to start planning these things out. Okay. Some sort of reversal. So what I'm looking at here, just kind of break it down, is, let me pick yet another color. Let's do orange. Okay. Up to the 21. Down either 50% or 100%, up to the resistance, down to the roll reversal, and then buy the new rally. So it starts out like this. 1, double bottom, or any other reversal pattern you choose. Okay? 2, a higher high. 3, roll reversal. So 1 is the double bottom. 2 is the higher high. 3 is the roll reversal. So that either happens today or Monday. What do you think about that, AJ McFarland TV? Yeah? Cool. Nice. All right, we still have less than 50% thumbs up. So I'd like to see us go from 211 likes to 311 likes in the next 2 minutes. If not, I will shut it down and start my vacation. I actually have some meetings I need to do. All right. So we got 120 seconds to pop on 120 likes. I will wait. Okay. Okay. In fact, I'll take a potty break. I'll be back in 30 seconds. We'll see where it is. Okay. Well, thank you, everybody. If you need additional resources besides these free YouTube videos every weekday, then in the description below the video, there's a link to my book. You can read it if you prefer learning by reading. If you prefer videos, there's a link to my video courses, which are 80% off, but only for the next couple of days. I'll probably take it down maybe even this weekend. So if you need that, if you need a foreign exchange broker, please consider Traders Way our sponsor. The link is in the description below. And no, I don't make money on your trading. I don't earn commissions or something. So you'll notice it's just simply a link to tradersway.com. If you need a performance coach, the link is in the description below. There's lots of cool things, whatever you need. If you need hand holding, if you need for like coaching, if you need videos, if you want to read, whatever, it's all there for you. Okay. And if you subscribe, I guess I'll see you on Monday. If you're in my live trading group, I will see you Sunday night at 5 p.m. to set up trades for the next day and the rest of the week. Oh, if you need my chart templates, the link is in the description below. And for those that did click the like button and all that kind of stuff, thank you very much. And thank you, Maida, for the $2. I appreciate that. So have a wonderful weekend, guys. You deserve it. So peace on earth. May the pips be with you. May your profits be above average. I'm out. Except YouTube doesn't want to end the video. YouTube doesn't want to end. All right, I guess we'll just hang out here for 2 hours. It's funny, I clicked end like 5 times. Oh, there it is. Thank you, YouTube. So eventually it'll end.